After hours, it's just slightly lower, so it's not getting hammered in the after hours. Bringing back the bulls and bears to talk about Intel. Mike Norman, your thoughts on these numbers, and when you look at the product mix and where they make those products, mostly not here in the U.S., what does that say to you?
Not only where they make them, but where they sell them. I think you pointed that out, that they get more of their revenues from overseas now. And, you know, this gets back to, it's almost exactly a description of what's happening in the overall economy right now. You take out the financial sector, the housing. The rest of these companies are doing pretty well. They have exposure overseas. They're benefiting from the whole globalization, from the growth externally. And that's a positive thing. I think the Intel numbers are great. Look, I own Intel stock. These guys, by the way, at Al Frank, they're excellent. They're long-term value managers. You know, they won't get into anything unless it's a 5-year whole time horizon. And they'll sit and they'll wait patiently, and that's what I think
Peter Schiff has been tearing my arm out by its roots. If we don't put him on, I won't have an arm at the end of the segment.
Rabbit over here.
Two things. One, you're going to run out of patience with Intel. You know, how many times have they beat the number in the last 10 years? The stock is still $20, so I wouldn't get excited about it. But more importantly, sure, Intel is earning more dollars selling their products abroad, but what does that actually translate into Intel shareholders? They need more dollars because the price of food is going up, the price of energy is going up, the dollar is losing value, so naturally we earn more of them, but they're of diminished value. That's the problem.
Gary B., I know you want to say something here.
No, I do, because I think today is a monumental day. I find myself agreeing with at least one part of what Peter said. You know, we have these great numbers, and I'm looking just at the price action here. You know, Liz, just a few days ago, this stock was trading almost at 22.5. So we came out with these good numbers, and we're right back where we were just a few days ago. Bottom line is, this stock, I guess if I can parse what Peter's saying, has definitely been in a trading range all of 2008. So good news, bad news. I wouldn't really touch it until this thing makes some definitive action up or down, and it doesn't look like so far. We'll have to see where it goes tomorrow.
Hold on. I want to let Toby in here. Go ahead, Toby.
Well, guys, there's one thing we're missing here is that, remember, you know, all the Apple products are using Intel chips now, and because of the market share that Apple is gaining, we have them going from 3% to 6%, probably up to 10% in the next year. That's now starting to make a financial difference to Intel, and that's a piece I think we're missing here.
Tobin, I want to switch this to Washington Mutual, because you don't rarely see a bank stock doing semi-decently in the after-hours session after it comes out with earnings. It did miss on the top line, but you know, it came in at a loss of $1.40, Tobin, where the expectation was a loss of $1.05, but they had retail deposits growing $8.1 billion in the quarter.
Well, you can take the number, Liz, and do the following. If you take the new deposits and show that the cost of funds you're paying for those deposits is going down because rates have gone down, then you take that out and model it, you can see that they will actually have earnings growth once they get all the... I mean, a lot of these are non-cash write-offs, obviously, that they're taking now. So you can model this thing and make sense of the stock.
Smarty pants.
Well, the problem is there's going to be a lot of non-cash write-offs, and eventually it's going to be real cash.
Well, eventually, we've already seen $160, $200 billion of write-offs. Look, Citigroup alone lost $150 billion in market cap. That's more than all the write-offs we've seen so far right now. This has been a massive overreaction in these stocks. It's precisely why you get a day like today when the numbers look so horrible on Washington Mutual, and what happens? The stock goes up. Anyone who tries to invest by looking at a quarter's worth of activity, of performance, is never going to make any money. Hello? I'll just let you know that right now. All right, if that's how you want to invest, it's just not going to work out.
Gary B., go ahead.
Peter has tried it, and he knows.
Well, first of all, that what Mike is talking about is trading, which of course I love. But you know, I guess I'll take a little issue with you, Liz, on this one. You know, for all the, I guess if you say, you know, bad news translated into good news on WAM or whatever, the stock is now at 1066, right where it closed. So really, I think this is another.
Last bid at 1061, but go ahead.
Yeah. You're right. 1061 by 1066. You could drive a truck through that spread.
Yeah.
Don't trade it after hours. But the second point is, I think when this is all said and done, all these financials are still waiting for the next Fed move. This is another stock that's been trading sideways since
and that's
March.
pathetic because of the PPI, and we're getting the CPI tomorrow, and it's going to show inflation.
What's ironic here is that all the Fed rate cuts have done very little for the financial sector so far. I mean, the one thing that did anything, if you want to say, put a date on when the market bottomed, March 17th, when the Fed said, okay, here we go, the discount window is now open to non-banks, that turned things around. But the rate cuts, I have to say, and it might sound ironic, but if the Fed actually stops cutting rates, it might be something positive, because then we take away this whole, the Fed is the driver of inflation, and inflation's killing everyone. If you break that psychology, it could be a positive thing.
So you agree with everything Peter Schiff has said the past year. We got to leave it at that, gentlemen.